Hi folks, this is Palaniappan Mayappan. Today we have a most successful investor. He's an individual investor. He's a techie guy. Instead of saying techie guy, I have to say that he's a tricky guy. But don't take it another way around, okay? See, he is an excellent and smart stock picker. He's a very good reader. He knows the pulse of great investors like Warren Buffett, Charlie, Monish Pabrai, and so on. I can keep on say that. He is none other than my friend Santosh Thomas. On the behalf of you all, I welcome him. Welcome, Santosh.
Thank you, Mr. Palaniappan. Whatever you're saying, I hope it is true. I'm nowhere close to all these veterans. I'm trying hard to see whether I can understand the basics.
That shows your modesty. Okay, you are a highly modest guy. I know that. So, see, since you are into a technical background, what attracted towards market? Can you share your experience towards the market? It will be a great path for the followers to follow you. Lot of techie guys who lives their hi-fi lifestyle, instead of not focusing on the market, they are spending like anything. But you created whatever the thing, the knowledge and all these things, you transformed everything into the market. Can you share your experience?
Yeah, so I'm an employee. I have a day job. I work 5 days in a week. Sometimes it goes to 6 days, but I still have maybe most of the time I get my weekends free, at least the Sundays free. So I used to work for a large Indian company, outsourcer from 1998. So they were listed in the market, and they used to give employee stock options. So employee stock options are given when you finish a particular period in the company and you have performed reasonably well and the management is happy with your performance. They reward you as part of the package. They reward you with employee stock options, which is the first thing that helped me to understand that you are also part of the company and you're also a stakeholder in the company, not just as an employee, but also as a shareholder. So it is the company in which I was working way back in the 90s and 11 years, which helped me to get into some of the understanding of what all this stock market is all about and how this is going on. So they used to give me ESOPs on a regular basis, like, few shares, few hundred shares, few thousand shares on a yearly basis. So we used to accumulate it, and there is a lock-in period of 3 years. Some are 3 years, some are 4 years. So it is to retain the employee with the company, so that they retain long timers, and they are also benefited in turn if the company does well. So that is the real motivation for ESOPs. So after we finish 3 years or 4 years, I was still with the company, and the company was also doing well, but I had no clue what to do with the employee stock options. So whenever we go and check the stock price after the results is announced, maybe once in 3 months or 6 months, we used to see that it has gone up a little bit. So over the years, it has doubled, it has tripled, and things like that. So I wasn't too sure how to, first of all, encash it so that it is transferred into my name, or it is also sort of, how do I benefit it or encash it? So I left it for the first 3-4 years. I didn't know what to do. So it was going up, and I was just trying to read through some things, understand the procedures, how to convert ESOPs into my own name and retain it in my own demat account. So that was the first maybe a few years learning. And then we understand that our peers, like in the same segment, the IT segment, one used to do better than the other, one used to be comparable, sort of thing. So we could understand that this is the space we are in, and each one is having a customer base, a partner base, an employee base, and a stakeholder base. So this is how the whole management tries to balance this in all the 4 quadrants of the stakeholder management. And we were able to understand that, how the deals are done from a customer perspective, how to keep the customer happy, how to keep the employees happy, how to keep the shareholders happy. So all these things we were kind of learning in our job. So ESOPs was only a trigger to see what is external, which was again the shareholder part of the whole thing. Because I used to be an employee, I know the customer pulse, I know the partner's pulse, I know the society in which we live in, how we are trying to help the society through society means. But I had no clue about the shareholder quadrant itself. So I went through some books, I had some peers, I had some seminars, I went through some learnings just to understand what it is and how this is kind of set up from a employee stock option perspective as well as from a market perspective. And slowly, little by little, we understood that there are veterans in the market, not just in India, but abroad. And there is something called as compounding, where if you are able to um, wait patiently over a period of time, you can create reasonable amount of wealth. And because we are working for a private firm, we never had any retirement benefits. So at least I thought, we can at least wait for some time and cash it later, so that we at least can enjoy the benefits of the seed when we retire. That was also one of the thoughts to help go in this journey. So the basic triggers were, all set up in the company itself. So I didn't have to go outside to learn it, because ESOPs were the pivotal point of learnings for how to get into stock markets, what is the circle of competence, how to look at the fundamentals of the company. Slowly, we were able to gain this. And towards the end of my career in that first organization, we were able to encash it and made some reasonable amount of retirement money, I would say. So it's kind of, very decent in that sense. So that was my introduction to the overall stock market, Mr. Panyapan.
Okay. See, what is the CAGR you are doing currently?
See, we are not really looking at any, because we are just the individual investors. If the company does well, CAGR takes care of it. As long as the company is reasonably doing well, they will be able to do slightly better than bank interest. Anywhere between 12 to 15%, I'm extremely happy. I'm not looking over anything more than that. 12 to 15% is something which is standard, I would say. And if you slightly go below that during some years or some quarters, we should be able to grapple with that pain and move forward to see whether we are able to get better returns in the next financial year or next quarter. So that's reasonable expectations I have.
So better than
I
the
don't
bank
have any
rate.
high expectations.
Okay.
Better
So
than
better than the
rate,
bank
yes.
rate. Okay. Very good, Santosh. See, what made you to control your emotion? See, you are maybe the ESOP lock-in period or something like that.
We
See,
had yes. So the company used to give us a lock-in period because they had to retain the employees. The main purpose of ESOP is not to make you rich, but to retain you. So in the process, you may gain some wealth. That's all in the process. But the minimum lock-in period that we used to have those days was 3 years or 4 years or sometimes 5 years. So they used to give it in lots. They don't give all these things together, so that you are retained for a much longer period. And some people have stayed with the company forever also. So all these things happen because they grow as the company grows.
see, what is your advice to the shareholders on controlling the emotion part? See, everyone is easy to say that long term, but once the stock price started falling, they cannot control their emotion. So what is your advice for them?
See, as we are just employed with the company, we don't look at stock price on a regular basis, because that is the first thing. We don't really, we have enough and more work during the 5 days. Saturday, Sunday, there's no stock market. So unfortunately, we don't have to worry about that. So we don't look at the stock price. We only look at how we can kind of do our job, and how we can meet the customer requirements, how we can work with our partners, how we can add value, how we can enhance the capabilities, how we can enhance the skills in the team. Those are the things that we focus on. We hardly look at the stock price maybe once in a quarter or when the results are declared. We will look at it. So otherwise, I mean, we have no business in the stock market. We are just employees.
Yeah, very good, very good, very good, very good. See, still you hold the stocks, whichever what you got in ESOP, or you sold it or you invested in some other counters.
Yeah, so I've been holding those stocks in the 2000 and range, but I've exited that and I've reinvested them also. And because we see, that there are dynamics in the market. Some companies grow, some companies stagger, some companies die. So we should be able to look at it in that dynamics as well and see how we can reposition yourself in the market, because the dynamics in the market are something which are very interesting. So whenever you go and read these things during my weekend study, I see that some of them are doing very well, some of them are come down from their peak, and because of leadership issues, because of fraud in the company, whatever it may be, their value creators have become value destructors. So it's better to kind of, spread your bets with at least a few more options, so that you don't really lose your entire kitty. So that's again something that I've learned over the years. So nothing happens in a day. So you have to work on your knowledge. So as they say, those who predict do not have knowledge, but those who have knowledge do not predict. So this is something which is an ongoing journey, and as long as you are able to grow your knowledge, you are able to come to some better decision-making capabilities, and save yourself from the capital loss.
So very good quote you gave. Who has knowledge, they won't predict. Who has very good quote, I got it. See, as far as my knowledge is concerned, you are a very good and smart stock picker. In market, everyone says that hard work, hard work. In market is concerned, hard work is not required. We are not into engineering sector or any other farming sector. Okay. So how to, what are all the tricks you use to pick the stocks?
See, so I don't understand 80-90% of the segments. So that's kind of easy for me. All I understand is my circle of competence, which is very limited. So which means like I bring it down to 20% or 10%. So the one I understand, I want to really look at it, and I am interested in doing the business. So as long as you are able to eliminate that 80 or 90% and converge on that 5%, 10%, you should be in a good position. It's not that you should know everything, because it is not like you're trying to give a CBSE exam or a medical entrance or anything like that. You can pick and choose what you want. So that is the beauty of it. So as long as you are defining your circle of competence and you're sticking around with that, which because I don't have to expand the circle of competence every time unless I get into something which I know. I'm very much limited in my knowledge in that particular segment, in my industry or in my IT sector, and that's all I do. I don't do too much of things. So my knowledge is very limited. That's all I can say.
Okay. Yeah. Thank you. Thank you. Thank you, Santosh. Thanks for sharing your knowledge. See, the key takeaway from today's interaction with you is the top-down model. See, the technology which created value for a common investor, and then the ESOP is the model. You converted the ESOP into the capital. Then through the top-down model, you created wealth. So I hope that the audience will be benefited by watching the program. Thank you. Thank you, Santosh. Thank you. We'll catch up soon. Yeah. Okay.
Thank you. Thank you, Mr. Panipat. Thank you very much.
Yeah.